Good evening, everyone. My name's Liebenberg. I'm the CEO of Yellowcake, and tonight I'm going to talk about all things uranium and nuclear. If we look at what's happened in the uranium market over the last 5 years, it's been pretty phenomenal. I'll talk about our sort of history, but if you look at really in about mid-2021, the uranium price sort of took off. And if you look at the performance relative to other commodities, the uranium price is up almost 250% over the past 5 years compared to iron ore, copper, and crude oil. And what's driving that? There are really three demand factors and one supply factor. The first factor is energy transition and the drive towards a zero carbon society. And that 2021 kick up in the uranium price is not, it didn't just happen. If you look back the year before, President Biden came into power in the US. He put the US back into the Paris Agreement. And on the back of that, we saw a number of countries setting out their goals towards a carbon-free future, be it 2040, 2050, 2060. And we've also seen a growth in the global reactor fleet, principally driven in Asia by China and India. And then when the Russians invaded Ukraine, we saw a huge focus on energy security and energy independence. So we've had three positive demand factors, but against that, we've had 10 years of underinvestment on the supply side, really post-Fukushima. And that has all come together to kind of show where we are today in terms of the price. Yellowcake, we're a physical holder of uranium. We're a long-term buy and hold vehicle. We provide pure exposure to the uranium price. We don't have any projects, any exploration, any processing or mining. We have a very interesting contract with Kazakhstan, which is the world's largest producer of uranium. We can buy up to $100 million of uranium per annum from them, essentially at the spot price. And in today's very, very undersupplied spot market, that contract has a lot of value. We store our uranium principally in Canada and some of it in France. There are only three places in the West where you can store uranium. There's one in the US, one in Canada, and one in France. Most of our uranium is stored in Canada, some in France. And then finally, we have a very low-cost structure. We've only got 2 full-time employees, myself and the CFO. We both work from home, so we don't have an office. We've outsourced our uranium transactional activities and the accounting and IT stuff. So it's a very skinny structure. We target a cost drag of less than 1% of NAV. Last year, we had a good year. We were about 0.65%. We're currently running at about 0.8% as of our last reporting period. If you look quickly at our balance sheet, we have, on a pro forma basis, just under 22 million pounds of uranium. You take the spot price when this was done, $91. Last night it was $91.55. So almost $2 billion of physical uranium and a little bit of cash. That's it. There's nothing else on the balance sheet. Just looking at our history, we came to market in 2018, July. We raised $200 million on the stock exchange, listed the shares at £2. In total, over the last 6 years, we've raised $800 million, and we've now got an asset value of $2 billion. So we're the 4th largest company on AIM, and last year in particular, we had a very good year. The shares doubled, the uranium price doubled. We've got significant liquidity. Even if you look at the FTSE 250, we've got more daily liquidity than most FTSE 250 companies. Now, just turning to the uranium market, which really is the driver of our share price and our performance. We've seen very strong government support going into nuclear, as I mentioned earlier, really on the back of the US going back into the Paris Agreement. 100 countries have announced, zero carbon targets. At COP28, the last meeting last year, this is one of the first meetings where nuclear actually had a seat at the table. And post that meeting, around 26 countries have pledged to triple nuclear by 2050. In the US, we've seen the Inflation Reduction Act and various other acts. The Inflation Reduction Act alone sets aside something like $40 billion for nuclear. That's to preserve current reactors that are likely to close, to incentivize new fuel, advanced reactors. It's an unbelievable impetus into the US nuclear industry. In the EU, after a lot of haggling, nuclear was included in the EU taxonomy as a transitional fuel, which means that nuclear can now access green funding. And electricity demand growth, really the increasing middle class in the developing economies, and then new technologies in the developed economies. And I'm just going to talk a little bit about AI and data centers. A ChatGPT search uses 9 times the energy of a Google search. The data center spend in this calendar year globally is $225 billion. If you look at data center growth between now and 2026, it accounts for something like 1,000 terawatt hours of energy. That's what Japan consumes today in electricity. I mean, the growth in that space is just unbelievable. Amazon just spent $650 million buying a nuclear-powered data center in Pennsylvania. So the big tech companies are now looking at uranium because you can't run a data center off wind and solar. You need 24/7 reliable power. Small modular reactors, there's a lot of excitement around these. They, simple, single stage, smaller, safer, more flexible units. Rolls-Royce here in the UK is developing one that should be ready end of the decade. But most of the demand from small modular reactors aren't factored into any demand forecast yet. People are still trying to understand what it means. China have got their first commercial reactor ready 2026. The Russians have got 2 already. If someone like Rolls-Royce looking to commercialize your first reactor end of the decade, you really need to start thinking about the fuel now. It takes 2 years to build fuel for a nuclear reactor, and then you have to procure, the elements that go into it. And then, putting all of that together, policy, demand growth in electricity and small modular reactors, you can see what it means in terms of what uranium requirements are needed to power and fuel these nuclear reactors. If you look at China, back at the time of Fukushima, China had 17 operating nuclear reactors. Today they've got 55. They're currently building 27. They're looking to approve between 6 and 8 a year. They can build a big nuclear reactor in about 5-6 years now. So the growth there is pretty staggering. Long-term contracting. The nuclear industry really runs off of long-term contracts. Because fuel is such a critical element, you can't stop a nuclear reactor if you don't have fuel. It costs hundreds of millions of dollars to restart it. So a lot of these utilities contract a long way out. And we've seen contracting increase from about £70 million in 2022, £125 million in 2023. This year we're looking at probably £160 million plus. But the US is lagging in that. In the last year, I think the US only added something like £20 million of contracts under long term, and they consume about 50 million pounds of uranium every year. And there is a reason for that, and that is the Russian invasion. Post the Russian invasion, we saw the impact of that invasion on the elements of the fuel cycle. If you look at the enrichment price, it went from about $50 to today $160. The conversion price went from about $20 today $60. So massive spikes in those 2 elements of the fuel cycle as Western and Western-friendly utilities look to source elsewhere other than Russia. And the reason for that is Russia currently has 45% of the world's enrichment capacity and 35% of the world's conversion capacity. It doesn't produce a lot of its own uranium, but in the elements of the fuel cycle, it really dominates. So Russia also supplies about 20% of the nuclear fuel into the US and 30% into Europe. Last week, 13th of May, President Biden signed into law a ban on Russian uranium. So that ban will go into effect 90 days after last week, and it starts then. It has a waiver period through to 2028, and then from 2028 to 2040, there's a complete ban on Russian nuclear fuel into the US. What does this mean? The utilities after the invasion in the US started looking at self-sanctioning. They looked at alternative sources, and that's why we saw those two elements of the fuel chain price spike. And that really led to last year the significant jump in the uranium price. And increasingly, I think we're going to see a bifurcated world in terms of the uranium fuel cycle. Russia will continue to supply China, India, Pakistan, Middle East, Turkey, Egypt, Brazil, and then Western and Western-friendly utilities will have to look for fuel elsewhere. So the US will need to build its own fuel chain. In the West, the same. Japan will need to source fuel from Western entities. And if you look at the biggest users of uranium, the US consumes the most uranium today. It doesn't produce anything. There's some talk of restarts. China has very little domestic uranium production. France and South Korea, no domestic uranium production. So you've got the biggest users of the fuel don't produce any of it. And by contrast, if you look at the supply side, it's extremely concentrated. You've got something like 4 countries produce 75% of the world's uranium. And, the world is highly dependent on Kazakhstan and Kazatomprom. And what we're seeing with the Russian influence in Kazakhstan and also the Chinese, they are looking to secure more of that fuel to Russia and China, and less of that fuel will go to the West. Today, 50% of Kazakhstan's uranium goes to China. And so, this is going to put increased pressure on those Western utilities that don't have domestic sources to look for sources of uranium. And I guess, if we put all of this together, the best way to describe the situation is a fragile supply side trying to supply into very durable demand. 32 countries around the world have nuclear power stations, 440-odd nuclear power stations, against 4 countries producing 75% of the world's uranium. And if you look at what the world's going to rely on, look at the grey bars, all of that is production that's not in existence today. We need new restarts and new greenfield production. And we know in the mining industry that supply very seldom comes on stream, on time, and on budget. So, I think this supply side is really, really stretched. And any events on the supply side, either a weather event or a strike event, who knows where the uranium price could go to. So, we're sitting today at a uranium price of $91, and if there's a supply side issue, I think it could almost go to anything. Then just to put that all together, I think we firmly believe Yellowcake is very, very well placed. We're a physical owner of uranium in a market that's currently undersupplied. Supply will come. It always does come, but it's not going to come in the next 3 to 5 years. I think it's going to be before the end of the decade before you see meaningful supply come to this market. So certainly in the near to medium term, we're going to see a very stretched supply side. We currently own just under 22 million pounds. We're due to get a delivery next month from Kazatomprom, which will take us up to the 22 million pounds. So I'll stop there. Roland.
Andre, thank you very much.
Yes.
Okay, do you have any questions for Andre, please? There's a few here. We'll come to you after the one at the back.
Hi. I've been held for many years, but I've never actually been to an in-person with you before. That's one question. What's special about now? Because I haven't seen you before. But what I want to remind myself, I'm sure everybody else is wondering, how big is your stock compared to consumption for a year? And how do you and your buddy, 2 of you, manage? And the other question I've got is, what happens to your product after it leaves storage? You've got storage in France and Canada, I think. Is it ready to go into a reactor, or what has to happen there So scale and just the mechanics of how you manage the business.
So on the scale side, we, as I said, hold just under 22 million pounds. Production this year will be about 150 million pounds, and consumption's about 200 million pounds. So that's putting what we own into the global context. In terms of how we manage, all we own is physical barrels of uranium sitting in outdoor warehouses. So there's not a lot to manage. Most of what I do is these sorts of events, and I have done the shares events before a few times. So it's we don't have I don't have an HR issue. If I did, it would be a real issue, because my CFO would But it's a very, very simple business. So it's talking to investors, talking about the uranium market, governance. That's most of what we do. So it doesn't take a lot of, we don't need a huge team to hold this. So processing, the nuclear fuel cycle, where we own our uranium, is the first stage of the fuel cycle. So you take the uranium oxide, U3O8, which is what we own, 55-gallon drums, half full, because each drum weighs half a ton. It then gets converted at a conversion facility, which is where the storage yards are, into a gas, uranium hexafluoride. The hexafluoride then gets transported to an enrichment facility where you separate the 235 and 238 isotope. You want the 235 isotope, that's the fissionable isotope. So you take natural uranium at 0.7% grade, you enrich it up to between 3.5% and 5% grade, which then goes into nuclear reactors. Just as a contrast, weapons grade uranium is 95%. It's a completely different technology. No, we only hold the physical barrel. So it's at a warehouse where it gets consumed into the process. The barrels we own, they don't have our name on it. They're commingled. So it's a bit like having a pound note at the Royal Bank of Scotland. It doesn't have your name on it. You've just got a credit in your account at that facility. But each barrel of uranium is tracked by origin. So we have a statement every month of all the barrels that we own and where they come from. Explicit in all uranium contracts is non-Russian origin. So, and that's been the way for many, many years in this industry. So we don't own any barrels of Russian uranium.
Question here, please. Yep, go ahead.
I don't really expect you to answer this, but your supplier in Kazakhstan, if Russia does what it says it's going to do to Ukraine, is Kazakhstan next on the list? How confident are you with your supplier?
Yeah, so firstly, the contract we have runs to 2027. So it was a 10-year framework agreement we put in place at the IPO. So it's not perpetual. It allows us to buy up to $100 million a year. The reason why it was $100 million, because that was the highest level of approval of Kazatomprom before it went to the government, because the government owns 75% of Kazatomprom. So if we lose that contract in 2027, and I actually expect us to lose it, because today we're in an undersupplied market. When we started this journey, we were in an oversupplied market. So Kazatomprom needed us to take inventory from them rather than putting it in the spot market. Today the market's so tight, it's very, very hard to buy spot uranium. So I expect in 2027 that they'll say, thank you, but we don't need to renew the contract. You've done a great job for us, blah, blah, blah. So it's if that happens, then we have to go into the spot market and buy uranium. But whilst it was important to grow at the outset, when we started as a $200 million company, a lot of investors wouldn't look at us because we were too small, the liquidity was low. Got to $500 million, we picked up a few more, investors, bigger investors of interest. Now that we're a $2 billion company, that imperative to grow is not, if we can issue shares at above our NAV and buy uranium, great. If we don't, it's not the end of the world. So we'll end up being probably opportunistic purchasers in the spot market in time.
Next question, please. Sorry, one here. Sorry, yep. And then we've got Mike over here, please. Next.
Can you just enlarge a little on how you go about funding the exercise? You're issuing new shares in order to pay Kazakhstan.
Yeah. So what happens, the way the contract with Kazatomprom works is we give them a notice to price, They've got a period of time, a few weeks, to come back with a price. The price is just the average of the two quoted prices, so it's essentially a spot price. We've then got 14 days to raise equity at that price, and depending on how much equity we raise, we then determine a volume. So all the purchases we have done to date are all fully equity financed. We've got no debt, no hedges, no convertible structures. It's just an all equity vehicle.
In theory, the share price ought to move in lockstep with the price of uranium.
Correct.
But life rarely works like that. To what degree have you been either at surplus or deficit to net asset value of the share price against the value of the uranium held?
Yeah. So, at last night's close, we were about a 3% discount. But in 2021, we were at a premium the whole year. We did 3 equity raises, and we got to as high as a 20% premium. In the last year, we've been at a discount for pretty much most of the year, and we got as high as an 18% discount. The people that trade our shares are not the people that trade uranium. So there are periods in the market where we are much more impacted by macro factors. So beginning of last year, we were at a premium to net asset value. We raised some money. Shortly after that, we had Silicon Valley Bank, China COVID phase 2, crypto, and then we were back at a discount. Because we're liquid and generally are positive in most people's portfolios, we tend to be treated as an ATM. People sell our stock to cover losses or requirements elsewhere. So it's the macro factors in the stock market that have the bigger impact on our share price day to day. But pretty much we're kind of bounce around the underlying net asset value on a look-through basis.
Do you publish the position in terms of surplus or discount?
Yeah, so on our website, every day we publish our share price, and we publish the uranium price and the implied uranium price based on our share. So you can see, I think last night it was like $88 implied price against a $91 actual price. So that's on our website all the time.
Thank you very much.
Question in the row behind. We've got quite a lot, so try and please be quite quick if you can.
Hi. How do you audit your uranium stocks? I mean, I'm just thinking, a few years ago, the London Metal Exchange had an issue with their nickel contracts. People are, just rocks in the bags rather than actual nickel. How do you know, if there's just 2 of you, how do you know that you've got uranium?
Uranium's very, very regulated. So I'm licensed to hold and store uranium. I'm not licensed to transport it. So I can't pitch up and say I want my uranium. Firstly, uranium is one of the most dense, products. So it's very, very heavy. And these literally, it's an outdoor yard with 55-gallon drums stacked 4 high. They can't stack more than 4 because it crushes the bottom barrel. So it's very difficult to physically move them. We get a statement every month, each barrel by origin. Last year in September, I went across to go and see the site, and our auditors have been, and they're going to go again. So, there are multiple checks and balances.
We have a question from this side of the room. Can we have a microphone over here, please? Thank you, Steve. Yeah.
Thank you. A couple of questions, if it's okay. I don't understand why yellow cake. Is that what we call uranium in the world that I don't live in? What's your history out of interest? Did you do this before? Why did you decide to join AIM as opposed to any other market? Yeah, that's it at the moment. Thank you.
Yellow cake is the sort of common name for uranium oxide. So if you look at it, it's when it comes off these belts, it looks like a cake of So we called it yellow cake. But it is the sort of common name for uranium oxide. My background, I've spent the last 25 years in the resources sector. I joined Billiton in 97. I was with Billiton BHP for 15 years. I was then in private equity on the resources side. And then in 2017, through a contact I had, we started looking at the uranium sector. There was a connection through to Kazatomprom, who were looking to become more commercial. So, it was sort of good timing and good fortune that we ended up with this. It took us about a year to put all the plumbing in place before we came to market.
And the reasons for joining AIM as opposed to...
Yeah, so originally we joined AIM as a $200 million company because you didn't have the preemptive right restriction of the 20% on the main board. So we could issue, we could raise $100 million, which is half our market cap, to buy more uranium. Today, it doesn't matter, and the board's actually looking quite seriously into whether we move to the main sector. The issues are under the current main board rules. We wouldn't get indexation, and we're not sure whether we would qualify for the FTSE. But there's moves afoot to change the rules, and I think that's going to be released in the summer. And what we've been told by our advisors is that under the new rules, there's going to be one sector. It's not, it's going to be called the commercial sector, and we think we'll qualify for that. So we may consider moving up to the main board, and I think we'll be at around the FTSE 60 or 70, FTSE 250, 60 or 70 if we didn't make that transition.
Andre, thank you very much. I'm afraid we're out of time. Thank you for joining us. Thank you.